Most of the time the market will give us tiny blueprints indicating or trying to tell us where it wants to go next, but as usual we do ignore these tiny signals. So look at this. The first thing you want to do is identify previous highs and previous lows, okay, and then mark those zones. So this is what I'm talking about. For example, so you had this to be a highest zone over here, mark that with your rectangular tool. Then now the previous low, of course, should be this. Okay, so now we are talking about demand and supply zone. So what do I mean by demand and supply zone? Okay, so at the top over here, this is called a supply zone, and from the bottom over here, that's called a demand zone. Okay, so now to trade this kind of strategy, you need to understand what the market is doing inside this box over here. Okay, inside this box over here, that is what you need to understand, and from your understanding, then you have to make those decisions. Don't worry, I'm going to show you what to do. Okay, so let's continue. So for example, over here we understand that the market went up from that, then bounced off this resistance, then came down, went up, then came down. All right, so now all you need to understand, or all you needed to do, was now zoom in clearly and see if you can see structures being formed inside that demand and supply zone. Okay, so over here, let's do this. Let's try to understand. We need to draw even our trend line, guys. You can see this is what happened drawing that trend line. So up, let's make this somehow neat, just like that. Okay, so with that, we can try to interpret what was going on. So the market went up, then bounced off that zone. Okay, then let's continue zooming in, guys. I usually try to dig deep in my analysis, guys. I just don't give out analysis and not tell you what to do when you want to take your buy or your sell entry, guys. I usually go in depth, and that's what's up. So this is what was happening. Look at this. The market was in an uptrend, and this, as we know, let me just label this. Just a minute. Let's call that our supply zone. Supply. Okay, that's a sub. Now this should be our demand zone over here. Come on, this should be our demand zone. Let's go. This should be our demand. Oh, come on, baby. That should be our demand zone. So let's continue. I'll lock this, I'll lock this, I'll lock these ones. So look at this. Like I was saying, the market went up, but then of course we need to identify the previous immediate higher low, which was this zone. Okay, this is the previous immediate higher zone, highest low, that one. Now identifying that, now we can see that the market broke with an impulse movement, and as usual, now guys, we know that the market has already broken out of this uptrend. So that means we need to wait for a retest to the upper side of this new low, I mean the previous higher low that was broken. Okay, and that is what you can see. That is just what happened over here. Market went up to test that zone. And then, guys, I have a policy that you don't take your entries unless you see some of reversal sign or some of reversal structures have been created by the market. Okay, so I'm just going to continue digging it deep, guys. Understand what I'm talking about. Okay, of course, with that reversal sign we was looking for, with this retest sign we was looking for a continuation to the downer side. You can see this now, the market giving us a new lower high over here. Then this is a lower low, lower high. Then as usual, we want to take our sell end, right? So now don't worry, I'll draw this, guys. My policy is wait for the market to give us a clear reversal structure or sign that now it's time to go to the upper side, to the downer side. Look at this. The market went up and now gave us the first bottom top, of course, and now went back, now gave us the second top. So that was a good sign or an indication for a reversal. Look at that. we have the first top over here and then the second top over here. That's just a good indication to go to the downside. With that, guys, identify also once again the previous higher low, which is this. Now when the market breaks that with the bullish candlestick, bearish candlestick this time, I will take my sell entry immediately. Okay, stop loss of course above that zone, then now swing this market all the way down. Look at that. Okay, but of course you should not be greedy, guys. Okay, because now this is the supply, the demand zone. That is what you should be targeting. Okay, don't worry about this. Maybe that might be a false break. Don't worry about that. So do not be greedy enough. Just take what the market has given you. Okay, let's continue. All right, so now we know that the market had already touched our supply zone, then now bounced back to our demand zone. So what next? We believe that the market will try to go back. Remember that this downward movement, let me draw this downward movement that we've taken our sell entry over here, that was just an indication that, okay, now the market was going down. All right, so the market as usual will need to go back to test our supply zone. This was just a continuation part movement to the downside until it touches our demand zone. Then from our demand zone, then now we anticipate that the market should go back to retest our supply zone. So from then we continue with our drawings, guys. We can see we need to wait and see new structures being formed to give us a clear indication that the bulls are now inside this market. So that we can see that the market gave us a breakout structure in our demand zone, then now maybe that's a false break, went up. Okay, so let's try to understand what was happening over here. With that, we can see the market gave us this new higher high and higher low, right? That's nice. That's nice. So let's do this. So now we need to take our entry and the third touch. So as usual, we know our first touch over here, then the second touch over here. Now we're waiting for the market to give us the third touch over here, then to confirm that now this is just an uptrend, right? So with that, as usual, we need to identify the previous immediate highest zone, which is this zone over here. Okay, that's the immediate high. But then we wait for a bullish candlestick this time to break out of this high over here, which should be this. Then now stop loss below, wick like this, and now target your way up. Look at that. I believe that's what's up. And you can see actually the market came back to retest our previous higher low over here. You can see the market came back over here and tested. So with that, now you can see the market also played around once again, giving us new lower high over here. So once again, you needed to wait for a bullish candlestick to close above that zone, then now make your stop loss below that zone now, then target all the way up. That was crazy, guys. That is, I'll just look and maybe see if I can get another example and maybe be more clear, right? Be more clear. Yeah, I like those big movements, guys. I do prefer these big movements for maximum profit, guys. I don't like those tiny movements. Okay, for maximum gains and maximum profit, I like those tiny movements. Those major movements, guys. All right, so let's continue. Let's see if we can get something over here. Okay, I like really big movement, gang. Of course they're there. We can see there are so many, right? There's so many. Let's just do this. There's so many. Can do this. Let's continue and zoom in. This is actually, this is a trending market. Let's look for a clear one. Let's see what this has for us. Okay. Let's see what Euro NZD had for us. Okay, we can see something over here. Yeah, this can be nice. Okay, so let's try to understand what this market was doing. We need to do this, make our zone over here to be our demand zone, then now the previous high, of course, let's do this. Okay, so now we need to understand and try to trade around this level over here, right? We can see that that's what's up. So first things first, we continue drawing our trend lines and understand the movement and what the market was doing. So we can see that the market was in a downtrend over here, came back to retest that trend line, and that's what's up. I can see the market gave us a contraction channel and then went up. All right, so with that, I need to identify some lows and highs that the market might try to go back. So the immediate one over here was this zone over here, and I can draw that like this. So now, as usual, we need to wait for the market to break out of that, then take our buy entry as usual. Okay, let's see. So with that bullish candlestick, we did this. Then now our stop loss below that zone, trying to target all the way up. All right, that's what's up. But then you can see it took time. It took time before hitting our take profit. Probably was it? Yeah, took some time. But because actually this was the market was moving in a sideways. Okay, so let's say that was up, and now the market did that. We need once again to understand how the market came down back to our demand zone. So let's draw that trend line. Do we have? Yeah, we have something over here. You can see the market came down, right? So now the market broke out of our supply zone. So what happens, or what should we do to take our buy entry? We want to see if the market is giving us clear trends. Okay, the first touch and the third touch. First, this was not the third. We have that touch, but nothing much. So the market did that. Let me just show you something, guys. Like I usually the reason why I like holding waiting and see if the market breaks out of previous highs. All right, so we can see the market just gave us first touch, the second touch. So the third touch was around this zone over here, and you can see nothing. Now the market gave us nothing. So we can draw this to be previous higher low now. So let's continue. So with this, we need to understand what the market was doing. All right, let me just remove everything now, because the market has already given us new structures, new highs and new supply and demand zone. So we identify that. Now identify this zone over here as the new zone. So let's continue, guys. We can see the market went up. That's crazy. That's nice. Market went up, right? Now we identify the immediate higher low of this zone. And like I said, guys, I don't take trades unless I've seen a reversal sign. Okay, so the market did this, went back. All right, that's what's up. Came back. Should I have taken that sell entry? No, I have not seen a reversal structure. And look at this, the market gave us the first top, then came back for an neckline, then the second top. Now that's what's up. So those are just confluence. I'm trying to add, guys. Look at that, for a reversal. Right now, all you needed to do is wait for a bearish candlestick this time to close below. Then now take your sell entry, then target our demand zone, guys. Do not hold your trades, right? Target the demand zone just like that. And now let's continue and see and understand what the market was doing. So now we understand that the market went up, then now came down. So as usual, we expect the market to go back to the upper side, right? As usual. All right, understand that, or mark that as usual. So let's do that. So we need to draw a trend line once again. We did that. You can understand the market was doing. Should get that. Okay, let's do this. Okay, the market did that. Okay, so as usual, we need to wait for break of structure to give us lower high, lower low, lower high, lower high. So now, of course, the market broke out. The market broke out of our trend line over here, but there's a certain way that the market has broken our trend line, and we need to understand, guys. Like I usually say, that you need to understand the market is approaching a support or a resistance zone. So this time, if we was to take our buy entry, guys, I needed the market maybe to come back. Try to break out of that structure, then now reject, then go back down, then now try to break, then that is when we should be taking our buy entry. But this time the market just broke, right? So when that happened, we can see the market broke. We need to identify this as a high. Okay, so the market did that, broke, then came down. All right. Let's see. We can see the market is giving us trends. Market is giving us trends. So the first touch, the second touch, and the third. So when the third touch came, we needed to identify this was the zone that the market did create over here. So all we just had to do is wait for the market to break out the bullish candlestick over here. All right, then that is when we could have taken our buy entry. But guess what? The market did not break. The market continued going down. But then if we zoom in once again and see something over here, let me show you this. The market was giving us certain structure, a continuation pattern. Look at this. The market was in a downtrend. They now started giving us a continuation pattern to go to the downside. So how will we have tackled that situation? So look at that. The market did break. That's what's up. So actually, basically, I could have not taken this because we also had a a demand zone over here. So that's what's up. So let's see. The market, if we do extend this, we still need to understand what the market did. So now we understand the market broke out of this. That nice. I can see that the market has broken out of our demand zone. This was our demand zone. Let me name that demand zone. Guys, remember, I'm just trying to follow along. This is just pure price action, trying to follow along what the market was doing. So now I'm understanding the market did break out of our demand zone. So as usual, wait for a pullback. Okay, and then I've told you guys that don't take a trade unless you've seen reversal structures have been formed. So now let's continue understanding what the market was doing. We see that the market gave us that. This is a continuation pattern. Yes, that's what's up. We can see that the market gave us an impulse movement. Guys, let's just do this once again. Let me just go back. Look at this. The market gave us an impulse movement, a continuation or a correction. Impulse movement, guys, and now once again is back in this channel to go down. Those are just conferences. All right, now all we need to identify is the immediate now higher low. The immediate higher low was this zone here. Identify that. Okay, but we don't take our entry unless we see a reversal structure, double top this time. Look at that. We had the first top, the second top over here. So all we just had to wait is for a bearish candlestick to close or to break below this support zone over here, or our demand zone. Let's just make it more tight and neat. Look at that. I would have taken with this bearish candlestick, that bearish engulfing candlestick, Marabouza. I would have taken that sell entry over here. Now my stop loss, of course, above that zone. And now aim. look at that. The market did that. The market continued going down. We had this, maybe our first take profit over here. Let's continue. All right, so the market smashed that and now went back. All right, crazy, guys. So now it's like I'm giving you a signal. This is Euro NZD today. Look at that. The market, nice, guys. Look at that. The market did this. That's a false break, went up. Now look at this. Look at this correlation, guys. If I do extend my previous higher low like this, you can see that is the same way or the same zone that the market went to retest and broke out once again. It did not even break above, broke out once again, then broke below our demand zone now, then went back to retest, came back. Crazy. So we can see that the market is really respecting those flip zones, which is amazing. All right, so I can do this. I can make this area of sensitive for now, and now try and see and maybe understand what the market will be doing. That's just the easiest way, guys. All right, I don't know, maybe if I should give you the last example, or you guys are tired, or all right, I don't know if you guys are okay. So let's try and understand this. So we had this, we come and identify this as a highest zone over here. This is the last example, I believe. So guys, I'm also tired. Then now we understand that this is now our supply zone, our demand zone. So let's zoom in, guys. Let's zoom in. So after identifying those structures, then now we draw our trend line and try to understand how the market approached a demand or a supply zone. So we can have that. Then we have this. Okay, that's what's up. Contraction channel. Now when you see a contraction channel, just get ready for a reversal structure. Look at this. Then identify this previous lower high over there. Wait for a break of structure. Look at this. We had first bottom, then the second bottom. Those are just signs of reversal, guys. Take your buy entry over here. That break, of course, you were supposed to stop loss below this zone over here. Then now, of course, target this, right? So we can see it took some time. It took some. Oh, we had a sensitive zone over here, right? We have a sensitive zone over here that the market, of course, tried to respect. So probably you should have this should have been our first take profit, then the second. So let's see what happened. The market went and tried to bounce over our sensitive zone. Guess what, guys? It gave us a clear reversal structure this time. Look at that, a double bottom. With that, guys, and you can see we needed to identify the immediate previous lower high. Let's zoom in. I don't know, you guys should be keen how I'm taking my entries. Look at this. Give us this. We had that to the downside, another contraction channel. Then you needed to identify this immediate zone. So all you just had to wait for is a break of structure with a bullish candlestick this time. I believe you can see this candlestick over here. Then now stop loss below this zone. And now, of course, once again your first take profit over there, and final take profit all the way up. And that is, I believe that was hit. That was it, gang. All right, so let's continue. So we can see that the market did that. Let's do that. We can do this the whole day. We can identify this, that the market was doing this, the market was doing that. All right, so now the market did that, but look at how nice is this. As usual, identify the immediate low. That was what's up. And like I said before, guys, don't take your entry unless you've seen a reversal structure. All right, so let's continue. So the market came back, then broke. Yes, it broke, but do we have a reversal structure? I don't know. I can't see any. Look at this. My anticipation should have been the market to go back to give us now a clear indication to go to the downside, but that did not happen. So that might have been a fake out, gang. That might have been a fake out. What's up, man? Let me remove this. Let me just show you something. Let me show you something in a minute. Of course, this might have been a reversal. This might have been a double top. We can't ignore that. We can't ignore this. All right, so probably let's do this. Let's just take our entry. The market probably gave us a reversal structure, double top. I don't know if that makes sense. Probably because I can see a contraction channel, so I can see the market came and maybe did take our sell entry over here, and target now all the way down. And yes, I believe it was taken out. Yeah, let's say that. Yeah, market just took us out. That is, if we believe that this was a reversal structure, a double top, then that is now, I believe, you was taken out. But for a clear double top, guys, I don't like this one. I just want the tops to be like this. All right, in line. Look at that. Look at this double bottom. There was in line. All right, that's why you can see that was a fake out. That is, if you did believe that this was a reversal sign with this as a double bottom, double top, then that is why you could have been taken out. All right, so I just like, and I like it when the reversal structures are in line. All right, that's what's up. That's what's up, baby. I believe that's all. Yeah, so adios, amigos.